Hello, everyone. Hey. Welcome back to another week of Kingdom Builders Credit Repair. Michelle Green and credit and financial tips here where we talk about every Friday from 12:30 to 1, the ability to be able to learn about your credit and your finances. That's right. We are so excited that you are here today, and we are going to jump into our topic for today, which is about our terms and conditions. So, we are always going to come on to make sure that everyone who is watching us understands what credit is, and then we will discuss our particular topic for the day. So, first, let's make sure that you are subscribed. Go ahead and hit that subscribe button. Go ahead and share this with a friend so they can learn how to take better care of their credit and their finances. And then make sure that you comment below if you have a question, if it's something that is concerning you, or if you have a comment about the services that you're already a part of, the KBCR family. Thank you so much, everybody, for being here, and just come on in the room. Let's get started. Okay. So first off, let's talk about credit. What is credit? Credit is the ability for you to be able to make a purchase because you don't have enough money right now to make a purchase for something that you need or something that you want. And when it comes to us, what happens is we start working in the workforce as a teenager or a young adult, and we get into that workforce, we start earning a living, but we don't necessarily have any guidance on what to buy or when to buy it or when to position ourselves to be able to purchase a large amount of things. So when it comes to a vehicle, a car, even credit cards that will help us to just maintain our basic living expenses, we have to understand that first we have to earn the right type of income, and then we are able to build up our credibility through companies, which are banks and credit unions that will lend us a credit, a line of credit. So basically what happens is once we make the money and show proof that we are consistently making the money, especially over a period of the last 24 months, then a lender or creditor will begin to trust us to get a larger lump sum of money that we can purchase a vehicle, a car, a personal loan, a credit card, or whatever it is that we would like to make a purchase in for our credit. So that is what credit is in a nutshell for everyone that is, just kind of not sure about what credit actually is and how it works. We are literally financing for something that we don't have enough money for right now that we can actually obtain over a period of years, the ability to be able to own or to be able to manage consistently like a credit card over the next few years of being able to have something that belongs to us when we actually do have enough money to pay for it. Because, when we think about working, we actually be working over years or periods of time where we make millions of dollars. So it's not that we can't afford it. It's just that we have to look at it in incremental bites when it comes to being financed for credit. So that's what credit is in a nutshell. But today we are going to dive into the topic of protecting your power from the fine print that we don't read, okay? Y'all know what I'm talking about when it comes to fine print. Whenever we look at our terms and conditions, we are actually not literally looking at the things that we are signing. We are just sitting there and we're signing something because we got approved, but we don't really read the fine print. And today we are going to be talking about that fine print. We're going to be discussing the things that help us to really think about, okay, well, what is it that I'm actually signing? And am I signing my life away? I don't really know. So let's talk about some of the secrets that are hidden inside of the terms and conditions of the contract agreements that we sign. That's right. So what are we signing and how does that affect our credit? So first off, we want to look at what are some of the secrets around these terms and conditions. The first thing that we want to really pay attention to is the dangerous trap of the hidden terms and conditions of data sharing. So inside of some of the contract agreements that we are signing our name to, and some of us signing our life away in, is the fact that we are literally agreeing to share our information, our name, our addresses, our phone numbers, our date of birth, and our social security number, and even the place where we work. Because when you think about a credit file, the first thing that a credit file consists of is your profile information. Profile information is nothing more than the information that is listed on your credit report. Is the actual information about you. So whatever you're putting on that application, a driver's license number, the length of time, your position that you've been on the job, whether it is something that is crucial, such as your social or date of birth, which they have to have in order to run your credit in the first place, then that is something that we don't consider inside of a contract agreement, that the creditor, the lender that is processing the actual credit, could be actually sharing data with companies that we don't want to even be associated with. So in your fine print, before you decide to just sign your John Hancock, okay, before you decide to sign that agreement, just take a quick review into the data sharing section and see if there are companies listed or how many companies are going to be affiliated with this particular organization that you are getting ready to have a line of credit with. That can be detrimental to you, because one of the things that we come across in credit is the fact that there are so many companies that are shared data inquiries on your file. Shared data inquiries affect your credit. If it's a hard inquiry, it's going to take away 2 points. If it's a soft inquiry, it can show the pattern of how you manage your money. So we don't want to get caught up in the data sharing with a lot of different companies when it pertains to our terms and conditions. The second thing that we want to look at is the fact that we are going to have an auto renewal on some of the accounts that we agreed to sign with. So when we are purchasing a line of credit, when we're thinking about buying something and we agree to do a auto renewal, that means a reoccurring payment is going to come out on a particular date or a particular bi-weekly date. Maybe on Fridays every 2 weeks, maybe every week, we're going to have an automatic draft. Well, one of the problems that we have around that is that so many people have bank accounts, and the way that KBCR sets up our budgeting is we teach our clients to separate their money that's going into the direct deposit of the bank account. We teach them to separate that from the drafts that are coming out of their accounts. So one of the things that you can go and share with your family and friends is that KBCR teaches that you should have a separate account for your income than you should for your expenses. And that is how we teach our clients to budget. So if you're not in the KBCR program, listen, you need to go ahead and get in there right now. Go to www.kingdombuilderscreditrepair.com, or actually you can click the link within this actual live TV show, and you can go ahead and join that way. Filling out an application is just that simple. That's all you need to do. So back to what I was saying, when you look at the terms and conditions of an auto drafted payment or auto renewal, what we're talking about is these may be charges that continue even after you have completed your contract agreement with a lender or creditor. So we gotta understand that just because it is a legitimate contract agreement, because we are so eager to sign instead of reading the fine print, it could cost us additional money that we don't want to pay out. So some of the contract agreements are literally set up so that even after you have completed whatever the term and conditions, the balance is for that particular account, they may still be drafting your account for the same amount of money that they were drafting either once a month, bi-weekly, or weekly. So you just want to make sure that you don't have any situations like that. So look for the auto renewals and make sure that you are not being hit with an auto renewal after you have completed your balance, your actual payoff for the debt that you purchased. Now, the next thing is that we are looking at hidden fees, which are considered to be our late charges, the service fees, any type of penalties like annual percentage rates that are buried into the fine print. So when we think about annual percentage rates, what is that? That's the interest that we are charged on the original amount that we borrow. If you borrow $50,000 for, let's say, a vehicle, then you're going to pay back approximately $75,000 because there is interest that is accrued on the actual debt that you are borrowing, which means that you have to pay back more than what it is that you actually borrow. And that's in every single line of credit that you're going to have. So no matter what type of debt it is, you're always going to have interest accrued because that's a part of the whole credit game as it is. You know, you don't actually get to go to a lender or creditor because when you think about it, what's in it for the lender or the creditor if you are not actually paying interest? So you have to first understand that the hidden fees are there for the creditor and the lender to make money. They are there for the creditor or lender to make a profit off of what it is that you are doing to borrow the money from them in the first place and for the money to be paid back. Okay, so we don't want to get caught up into the hidden fees. So we got to learn how to read. It will always be a section on the terms and conditions of the contract that you're getting ready to sign that has a whole section about late fees, about service fees, administrative fees, or annual percentage rates. So you want to immediately, before you sign a contract agreement, understand that there could be a late fee that is charged towards your debt. Even though you're making your regular payment on time before the due date, there could still be a late fee issue that says if you don't have this payment in by this date, by 5 o'clock p.m. Pacific time, Eastern Standard Time, Central Time, then it's still going to be counted as a late charge. And the late charge could be anywhere from $25 to $150. You hear the words that are coming out of my mouth right now? I'm talking about this is not any small change. So many of us get caught up into, especially when it comes to like our rent or any type of debt that we have, our utilities even, where if we have a late fee, we don't realize that we are going to be paying extra money that is not necessary for us to actually pay. So we want to make sure that we are aware of the hidden costs. We want to pay attention to, are there any administrative fees? So administrative or late service fees basically are fees that the company that you have gained credit with or getting ready to gain credit with, they will say that this is a service fee or an administrative fee that is basically going to be charged just because they are trying to make money off of you. So we need to understand that in addition to the interest rate, in addition to the fact that we have an interest rate, we are also going to have a service fee or a administrative charge, possibly, even though years ago there were laws that were set in place to do away with administrative charges. But what that is the only thing they did is they didn't necessarily take it all away. What they did is they changed the name of the type of charge that it is. So now instead of calling it an administrative fee or an administrative charge, it's now called a service fee. And the service fee may also include additional interest that is tacked on to a fee that you have to pay. Or it could even be a tax that is added onto the service charges or the service fees that you have to pay for the debt. So let's look at the fine print and not just assume that because we are having a pleasant conversation with the lender, the creditor, that they have our best interest at heart. I'm telling you guys, so many times we get caught up in the relationship with the lender or the creditor, especially if we have done business with them several times before, not realizing that the people who we are talking to have nothing to do with, in 9 times out of 10, anything to do with the actual contract agreements that have been created by the corporate office, by the people who set the contracts in place in the first place. And sometimes they aren't even aware of what's on that term and conditions of the contract that you're signing. So they may be a little taken back when you bring it to their attention that, hey, what is this about the additional service fees that I have to pay because I am getting ready to sign this contract with you all, and I don't want to have to pay additional money that is not necessary for me to pay so that I can actually complete paying off this debt. So that's one of the things that we want to really hone in on and pay attention to as it relates to our terms and conditions. And let's talk about the cancellation policy. Let's say that you actually get ready to get this line of credit, and in the line of credit, you're looking at the fact that, wait a minute, there is a cancellation policy that is in place. And the cancellation policy says that if I am going to cancel this policy early, that I have to pay maybe an early termination fee. Woo! Sometimes that happens with our utilities, especially as it relates to maybe changing a phone service line, or if we're changing our internet bill. It can happen when we're changing like some of the services like our Netflix, our Hulu, Amazon Prime, and things like that that are streaming services. We can look at the contract agreements and see that there is a cancellation fee. And that cancellation fee can cost us anywhere again from 25 to 150. I've seen as high as like $500 for a early termination fee. So it depends on the lender, the creditor that you are getting ready to obtain credit with, as to whether or not they are going to charge you a cancellation fee. So look at the terms and conditions cancellation policy when you are reviewing the actual paperwork before you sign your name. Because see, we're trying to keep our money in our pockets. We're trying to also obtain good credit scores. So I would hate for you to get into a term and condition to where you can't get out of the contract. And if you do get out of the contract, it's costing you thousands, I mean hundreds or thousands of dollars for you to just remove yourself from the contract agreement. So we want to make sure that we are protected before we sign. Now, one of the other things that I want to talk about today, and actually just had this experience this week myself with a new account that I opened, is optional credit life insurance. What is optional credit life insurance? Well, a lot of times when you sign a contract agreement, the lender or creditor will tell you that there is a protection plan or an insurance plan that will be attached to your contract, which means that even though you're making your regular payment, let's say your regular payment is $100 a month, you'll have the ability to add some type of insurance or liability, disability waiver plan that will protect you in the event that you are not able to work, that you are not able to make your monthly payment. If you lose your job, if you become disabled, these are the types of credit life optional insurance. So optional credit life insurance is basically where they are saying that if something happens to the point where you cannot work, then you will have the opportunity, if you pay a small monthly fee in addition to your $100 monthly payment, for example, then you would be able to be covered basically for 6 months to a year, or it would be dependent upon what the terms of that insurance policy is going to offer. Now, with optional credit life insurance, and like I said, it may not be listed like that in the actual contract agreement. It may just say liability insurance, disability insurance. It may say a waiver policy that is in place, but you got to look for the key words. The key words are basically going to be under the contract agreement terms that say if something happens to the point where you cannot work, then the insurance that you're paying for every month, in addition to your monthly payment, is going to kick in. Well, one of the issues with that is the fact that sometimes this policy, this type of insurance doesn't kick in at all. Sometimes it will kick in, but it won't kick in unless you have become disabled, unless you have been laid off from your job a particular way. Maybe if you got fired versus being laid off, then they won't actually cover the policy. If you were disabled, but maybe you were not becoming disabled in a particular way, then they will not cover the policy. So we got to understand what are the actual requirements with this type of insurance policy that will be attached to a fee that we have to pay alongside our regular monthly payment to pay off the debt that we own. We have to make sure that we're not falling for the okie dokie, okay? So one of the things that you can do to empower yourself is when you have a term and a condition that says you need additional credit life insurance, optional credit life, a disability policy, a liability policy, or any other type of word or term that they're using to say, hey, if something happens where you can't pay for this bill, we're going to kick in, especially in the event that there's another COVID that happens. Well, let me just explain to you. That usually never happens. And if it does happen, like I said, you're wasting 10 to 15, maybe even $20 a month or more on something that is a what if. Now, that's not to say that you shouldn't have insurance, because we highly believe in protecting your income with the ability to be able to, make sure you got the right life insurance, make sure you got the right house insurance and health insurance, make sure you got car insurance. But when you have already these other types of insurances in place, then why do you need to add the additional liability, disability, the additional credit life insurance? We don't need to always add that to our policies unless we know that something may be coming up or brewing down the road. So unless we are already in a position to where we know that we are getting ready to go into a situation where we got to have disability insurance or something of that nature, then we don't want to engage in any credit life insurance or any type of disability liability waivers that are going to cost us extra money that maybe we don't already have, so that we can pay just because, and really we're giving that money away to the creditor as well as to the insurance company that is connected with that lender or creditor. So make sure that you are reading the contract of why you need those type of policies in place, because that is a way for you to cut costs and save money on your debt items. Every single lender creditor usually offers something to protect you as far as insurance goes. But if you already have life insurance, you already have disability insurance or some type of short-term disability on your job, if you already have some type of long-term plan that if you become disabled, then why do you need extra insurance to pay for and come out of your pocket for the debt items? Listen, let's save money. Let's do things that make sense for us and not necessarily for our lenders and creditors, because they're already wealthy, okay? All right, then we want to look at the last thing that I want to talk about is the fact that when you look at your contract agreement, when you look at the fact that you have a contract agreement, you want to make sure that you don't have the type of additional coverage where it says that if you get hurt on the job or if you cannot work and do all these different things, that you are actually able to pay this extra small fee, this extra administrative charge, and you don't have to worry about, even doing anything. All you have to do is literally just go ahead and just, you know, cover this fee every month alongside your monthly payment. So we want to make sure that we have the optional life insurance. We want to make sure that we have any policy that the company, the lender or creditor, is offering personally to have you put in place, that we are removing those things so that if in the event that we are not able to work, we're not able to do the things that we need to do, that we're not falling into any type of issue where if we become sick or injured, that we have to pay these extra fees to the lender with our regular monthly payment. Excuse me. So when we talk about these hidden fees, when we talk about these contract agreements, the main thing is that we got to understand that there are so many different ways that we can get into trouble with paying our regular payment of debt to our lenders or creditors if we don't look at what we're actually paying for. So if you have contract agreements, and I know you do because I do, and you've had credit before, and if you haven't had credit before, just keep on living, because you're going to have credit that's up there with oxygen. You got to be able to have some type of credibility in order for you to have a good credit score and in order for you to really live in this world. So when you begin to look at your actual contracts that you already have, go through those contracts and see if there is what we call a force majeure. And this is where the contract agreement is saying that they have to disclose that if you cannot work, if you get injured, or if there's some type of illness that you may be at risk of dying from, look at the fine print to make sure that there are no medical exemption clauses in your terms and conditions. When we think about the medical exemptions, what is the exemption of if you are sick or you're ill? What happens to the debt? Is it passed on to the next generation? Is it passed on to your kids or your husband or your significant other or the other people who are at the address of where you live? A lot of times we don't think about when we have a contract agreement. We don't look or read the terms and conditions, but we really don't think about in the event of someone dying, in the event of us losing our life, God forbid, that what happens is in some cases, the creditor or lender may require in the terms and conditions that you pass this debt on to the next of kin. So we want to make sure that there is no force majeure or medical exemption clauses in the policy where it is not going to just stop the debt from being occurring to the next generation. We want to make sure that in the event that you stop working and let's say you become so ill that you can't even make any decisions of your own, you need a power of attorney. And now what happens to your debt? What happens to the debt that you owe that while you were working and everything was good, what happens to the debt at that point in time? See, that's what we need to think about. It's not just what's happening right now, like our livelihood is good and we're working, but what happens in the event of a sickness, of death? What happens in the event of you having to have a power of attorney? What happens then? What are the clauses in the terms and conditions that in the event that you don't make it and the time period that you feel like you are going to be living and being able to take care of the debt, what if something else happens in your life? What happens then? So the terms and conditions are so important for us to understand, y'all. It's so important for us to read and understand our contract agreements. It's so important for us to think about what it is that we are signing before we actually sign the agreement, because if we pass away Is that debt going to be passed on to somebody else? That's the power of attorney. Is the debt going to just go away? Will it be something that's added to our estate? If we have an estate, if we have a house, if we have assets, we need to figure out, in the event that something happens, all of the things that we have, and especially when we have a bank account like a credit union or a regular bank account, we want to make sure that we have beneficiaries listed on our debts, on our bank accounts, especially if we do have beneficiaries on our debt. Does that mean that they will assume the debt or not? So we got to go back through these contract agreements to make sure that we are doing the right thing with them and that we have everything in place that is supposed to be in place for our credit and our finances to be top tier. All right, if you have any questions, make sure that you go to if you go to www.Kingdom Builders Credit Repair to our website, or you can call us at 844-522-7552. You can also email us at info@kbcrllc.com, but definitely make sure you're subscribed, and you can even leave a comment below while you are watching this live and let us know exactly what it is that concerns you so we can be a solution for you. That's what Kingdom Builders Credit Repair is a solution for all credit and financial problems that exist. So make sure you're subscribed, tell a friend, share this live. Make sure you let them know that every Friday from 12:30 to 1, Michelle Green is going to present to you credit and financial tips. Okay, I hope that you learned something today, and I hope this makes your life better. Until next Friday, make sure that you are setting your notifications so you never miss an episode of the KBCR TV show powered by CTR Media Network. Thanks again.
At Kingdom Builders Credit Repair, you are more than a customer. You are a partner in your credit repair journey. We offer one-on-one guidance in a warm and friendly atmosphere. Kingdom Builders Credit Repair, empowering people to have financial dominion on purpose. Visit us online at www.kingdombuilderscreditrepair.com. 1320 Main Street, Suite 300, Columbia, South Carolina, 29201. Call 844-KBCR LLC. 844-KBCR LLC.